Oh, what is good, everybody? Welcome back to my channel. Mitchell Waxer here, and in today's video, I'm going to be breaking down to you all how to identify imbalance. So let's jump right over to the whiteboard and get to work. All right, so let's jump right in. Where is the imbalance? How can I identify the imbalance? Well, first know this. Imbalance is also known as insignificant price action. So this is simply where there's only one person in the market at a time. What I mean is either buyers or sellers. Okay, and this typically happens right after the manipulation phase. If you go ahead and tune into my last video, you will see that this happens right after the manipulation phase. So as you guys can see over here, we have those equal highs. We have all that money sitting right over here. But then we had that up candle before the down move. Okay, so smart money is buying right here in this candle. And what are they doing? They're buying up to take the money. Right after they take all the money, they're pressing sell right here, and they're pushing the market down. So let's say they dropped a whole bunch of lots right here. They're going to double and triple the amount of lots they dropped for the buy right here for the sell. Okay, so they're buying before they sell. And when they sell, they are dropping so much money at once that the market's going to move so quickly. Okay, and what you guys need to identify and notice is where there's no buyers in the market, and it's pretty simple to identify. So you're going to look at that last up candle before the down move. You're going to identify where were buyers in the market. Well, you see the wick that came down to here. Well, the market moved all the way down to here, which created that wick, and then buyers pushed the market back up to the upside. Okay, then we had this big candle that pushed the market down. It created this wick down over here, which means buyers were in the market right here, and they pushed it up to here. Okay, then we had that next candle. This next candle, buyers pushed the market up to here, and then they pushed it right back down. So what that means is, in this candlestick, there was an area where only sellers were in the market. There were no buyers in the market. How do we know that? Because there was no wicks or any buying movement. Okay, so where exactly is the imbalance? Well, imbalance is always created off of big candlesticks. So point out and identify big candlesticks, big movements. Then simply look at the candlestick before and the candlestick after. So if we look at this candlestick right before, we notice the wick went down to here. Okay, take that wick and draw it into the future because buyers were in there. But it went down because of sellers, and then went up right because of buyers. Then we look at the candlestick right after the big candlestick. We notice that buyers pushed the market up to here. Let's take the top of that wick and draw that into that future. So simply, what does that show us? That shows us in this part of the candlestick, there were only sellers in the market. There were no buyers. And guys, the algorithm simply does not like that. The algorithm needs to fill that. So as you see, the market is currently down in that area. Okay, now because we have imbalance, the algorithm again does not like that. So the algorithm naturally wants to push the market all the way back up to this imbalance zone. And notice that this is another confirmation that you can use upon entry, because if you go to my last video, you notice that this candle right here is your institutional candle. You could mark that up at the open and draw that into the future, and the 50% and draw that into the future. And in between that purple box is going to be your entry for the sell. But not all the time does it make it back up to that institutional candle. It may just come and fill the imbalance and then go down to the downside. That's why price and time is key. You always have to be well aware of price and time. So you're simply going to wait for the market to come back and fill the imbalance. Once it fills the imbalance, that's confirmation number one. Then you're looking for it to come into your point of interest area, which is your institutional candle. Go ahead and take that sell opportunity to the downside, capturing the lows. It's as simple as that, guys. And if you guys have any questions, feel free to shoot me a comment, shoot me a DM on Instagram. I'm here for you all. And don't forget to subscribe, hit the like button, hit the bell, and more content will be coming your way.
All righty, pretty short and sweet.
Obviously.
So let's talk about imbalances. First of all, did you guys understand the video? I think that particular video is pretty straightforward. It's pretty straight to the point. He addresses everything that I would normally talk about when it comes to imbalances, right? Let's talk about price action, okay? Because price action is it's the actual movement of the candles, and it actually shows you where buyers and sellers are in the market at the same time. I think this war has been going on for about a month now, couple months. So let's look at the euro. Prior to the war, we were on this little uptick, right? The market had fell, it pulled back as if it was going up. Then the war hit, and we get these two huge sell candles, right? Prior to the war jumping off, I used to do an easy money strategy on these weekly candles, to where if the market is going down, I would buy it automatically on this wick, right? The start of the week, I just buy this pair, trusting that the wick would go up and close the imbalance, right? So the video we just watched, let me trash everything on this chart so I can have clear drawings here. On the video we just watched, this is the last up candle before the down candle. Here's the wick, right? So on this wick, I can just draw the line out. This next candle, I would expect this wick to go touch this line. It's called healthy price action. That's what you like to see as a trader. And if you don't get that, then you understand that this is your imbalance, right? Your imbalance is in between those two green lines. So I want to do the next candle. There's a wick on the next candle. I need this wick to come up and touch it. It pretty much does. There's a small gap in there. I think that's pretty insignificant. Here's the third candle. Here's a wick. You'd expect this wick to go up and fill it, but you see the size of this candle? The size of this candle is a pretty good giveaway that this wick is not going to come back and fill, right? There are tools out there that you can use to measure where you expect price to come, and it probably wouldn't be way back up here, right? You can pull out the Fibonacci. You can measure from the top of this candle to the bottom, wick to wick, and look at the 50% range. It'll probably be somewhere in this range. But eventually, price will come back and fill in the imbalance from here to here, right? And the way that I look at imbalances is the price needs to come back and fill 50% at least to consider this imbalance as mitigated or closed. Okay, so if you can identify these imbalances, you'll know that the market is going to try to push back towards these imbalances, and eventually they will close all these imbalances out. So we can look at the same thing on the other side, right? Market pushed down. Now you get the last down candle before this massive up candle. As a trader, you would expect price to come back to this line. If you trade like we do, we would also want to see price come back and tap us in right here, right? We want the price to come down, wick us into the trade, and take us up. So let's play it out. The next candle, you get nothing, right? You don't get the retracement that you're looking for. You don't get wicked into the trade. It's a very shallow retracement, which means this move is pretty powerful, right? Only buyers in the market. So at some point, we expect price to fill the imbalance, right? In this red area. Okay, so at this point, because price broke this high, right? This move causes price to break this high. Now we can look for trades. Once price comes back and fills this imbalance or taps into this order block, we can look at trades to go back up. That's exactly what the gentleman was talking about. I think his example was a sell trade, but in this example, it's a buy trade. And you would expect to see once the price comes back and touches this area for price to come back up. Now, mind you, this is prior to all the Russian invasion. And there's our price, headed back down. And there it goes. So in this particular example, because we, because of the war situation, it pushed right through these areas. But the main thing is this imbalance was mitigated, right? But if you look at the size of this candle, you will see that we have the same situation now on the upside, right? All right, we have an imbalance from here to here. This entire area is an imbalance. So what we want to see now is we want to see price turn and come back and fill this imbalance. Okay, this brings us to present day. Now, for those of you who understand order blocks from last week, we anticipate this market going up. All right, we don't know how far up it's going to go. Starting this afternoon or whatever. But this market should push to the upside. And just because you understand imbalances, those of you who trade can take a long right here. And let me actually measure this out on the GAN box. Okay, so at minimum, you should be able to take a trade to here, right? I don't know how long this war is going to last, but if you notice, this move here broke structures to the bottom side. So we can expect price to push back up to some point to this area before pushing back down to these lows, right? Smart money says that you can take a trade basically to equal lows, right? So if the market is already pushed down here, it will retrace. It's not going to retrace 100%, but a lot of people will look for a 78.6 retracement. If I pull out the Fibonacci, take it from these highs to these lows, conventional wisdom will say this is a 78.6. So anywhere from this point to about 50% of this candle, this will be a great trade setup zone. This is a POI, point of interest, to take a short, right? So once the market pushes up here, this is considered a discounted zone, the 50% move, right? The market will eventually push into your POI. You can set alerts. You don't have to watch this, but you can just right click, add an alert. And once price pushes into this zone, you can look to short the market. And there's a pretty high probability that you'll get paid, you know, on a trade execution to the downside. Now, mind you that there are fundamental reasons why this market is pushing lower, right? And that's the war. So this is a weekly chart. I mean, in another 3 months, another 4 months, maybe we're not in the same, you know, war environment. So if the market conditions change, you can expect the price action to change. This price was otherwise headed to the upside. We'll have to, I guess, reassess the European economy coming, you know, on the heels of the war. Depending on what kind of damage has been done to the economy, you know, maybe the euro will keep pushing down against the New Zealand dollar, which is getting stronger. So if all things are the same, this area is a good POI for a short. All right, does everybody follow me on that? This is it's very important that you understand the basic concepts, right? These are conceptual ideas. This isn't a strategy. This is a concept. There's a difference. You're going to look for opportunities based off the concept that the market has to go up and fill these imbalances. Oh, look, we have a signal the market is going up. So since we understand why it's going up and where it needs to go, we can trade it up to at least here. Hopefully everybody understands that. Now, it's not to say that it can't go all the way back up or it won't go all the way back up, but you will never get all the money that there is to get from the market, right? You have to take what the market gives you, and you have to pick your spots, right? And because of the different confluences that we have a high probability setup that this market is pushing up. All right. We didn't even talk about this market bouncing off an order block that was over here. It taps into the order block. Those of you who have been with me for a while had this area marked up. So you were expecting a reaction. You got the first reaction here. It's bounced a couple of times. It's given the signal that the market is going to push back up. Now you have the background reason why the market is going to push back up, right? It has to fill those imbalances. And once it fills the imbalances, naturally there's liquidity, right? Liquidity, which means there's money sitting at these highs right here. So people who took shorts took them in these positions. Their stop losses are up here. So the market is going to push up since it took all the liquidity from these lows down here, right? It ran the liquidity on these lows. It created this low, then it came back and took out this low, right? Now it's going back up. The liquidity is at the top side. So look for the market to push back up into this area. If all things are the same, it'll then push back down and you can take a short to these equal lows. Now, the market is fractal, right? All that means is we're looking at a weekly chart now, but we'll see the same thing if we look at a daily chart, 5-minute chart, 15-minute chart. You can trade these concepts on any time frame that you like, right? The higher the time frame, the bigger the move, right? The longer it takes. The lower the time frame, the smaller the move and the shorter time it takes. So conceptually, you can take a lot more of these trades on the 15-minute time frame than you can on the weekly. The only problem with that is there's a lot of noise on those lower time frames, and until you are adept at switching time frames and understanding what's going on each time frame, I would suggest that you stick to the higher time frame, not necessarily the weekly, but definitely the daily, the 12-hour, the 8-hour. That way you're not getting tricked, on the smaller time frames. Do I have any questions over any of this information? No questions. So everybody can identify the imbalance. This applies to every asset class that you can trade. Every asset class that produces a chart, this applies to. Somebody asked about the indices. I would argue that that indices trade faster. They address the imbalances faster than the currency pairs. So if you look at this last down candle before the up move, it leaves a pretty good size imbalance here. This imbalance was in March. Immediately, right? If I throw the GAN box on here, I told you 50% is considered closed. So if I throw the GAN box on this particular imbalance, immediately this next candle comes down, fills this imbalance, then pushes up. So if you have a good understanding of price action, when this wick started pushing down, you would have understood that it was probably going to mitigate this imbalance, right? So you could have had an entry on a lower time frame right here. You could have looked to enter and you could have took a long, right? This is a bullish daily order block or weekly order block. The market taps into that order block, moves up with some serious pace, right? Leaving an imbalance. You get a down candle, then you get another bullish order block, but it dips down to this imbalance first. If you had entered the trade here, you would have caught a lot of pips, a lot of pips to the upside, right? There's no imbalance left here. Then there's a slight imbalance here, which is filled with this candle. Comes all the way down to close this imbalance right here. So the indices, I would argue they close imbalances a lot faster than a currency pair. Currency pair can have an imbalance for years, right? For years. Indices, it won't be that long. I haven't seen one that lasts a year. Any other questions?
Hey, Todd.
Yes,
Can
ma'am.
you do GBPNZD, please?
Sure, Elfie. How's the weather in Berlin?
The sun is shining today.
Oh, that's nice.
It's getting nicer now, finally.
I'm sure Berlin winters are horrible. Okay, you want to see where the imbalance is? Let me trash this stuff.
What do you mean? You want me to go over it? I'm actually watching you and doing something else.
Okay, so I mean, let's just talk about basic. I mean, this is similar to the Euro NZD, right? Prior to the war, they were going higher, right? The pound and the euro were pushing up. Once the war started, of course, it pushed to the downside. I expected this pair to climb based off of this structure break. So really, it would have been nice if this came down, bounced, and kept going up. But because of the war efforts, it pushed down dramatically to the downside. It actually broke structure in the wrong direction. Still a break of structure. So if you go up to the top, I know this is not quite as clear. Maybe if you go to the daily, no, it's not helping. Definitely on the monthly, you can see it. Somewhere in this area will be your POI. Go back to the weekly. Okay, so let's talk about the imbalances, right? Let me change the color. All right, this blue line will represent our POI for the sell move, right? We expect the market to come back up into this area, and then we can take a short back down to these lows, right? So there's a couple of different reasons why I like this POI, right? If you notice the imbalances that were left, I'll just change this to red, but if you notice the imbalance that was left on this candle, that's an imbalance. The POI is actually right in the middle of that imbalance, right? There's another imbalance below there But if you mark up the highest imbalance on a sell move, then naturally you can assume that these lower imbalances will be mitigated as price pushes up. So if anybody had that question, that's why we don't mark up the imbalances this low, because if this imbalance is mitigated, then we can automatically assume that price went and mitigated this imbalance first. So
I have a quick question.
yes, ma'am.
How did you get to this POI?
I just went to the monthly, right? In the video, he talked about the last up candle before the down move, right? So on the weekly, you don't, this is the last up candle before the down move, but it's not one candle, right? So in order to compress things into one candle, I just went up one time frame, and there's my last up candle before the down move.
But that line is from, like, how did you get that line? Is it halfway through that green candle,
no,
or
it is. It's
red candle? I'm not.
It would be the
I don't
red.
know.
It would be the red
I
candle.
came in a little late, so I'm sorry.
Oh.
Also to everybody else.
No, that's a good question, Elfie. Really, what I should have done, since Elfie is checking me, y'all, I should have put a GAN box. It's the red candle, right? It's not the green one, it's the red candle. So what I should have done was put a GAN box on this red candle and get the fit. And look, it's right there, Elfie. Why are you checking me? I'm right on the money. So if you put the GAN box on this red candle, you want to mark up the 50%. Remember in the video, he said mark up 50, half of that candle, right? So
the GAN box, you're using that box instead of the fib? Am I
well,
understanding
the
this?
GAN box is just, you can use a fib. I'm gonna show you. I use the GAN box just, I don't know. I mean, whatever, 50 is 50.
I never used that one. That's why I'm like a little bit confused.
Well, the fib, you're measuring retracement. The GAN box, I just use the 50 to get the halfway mark. But if you notice, this is still the 50. See that 50?
Yeah. But you're not including the wick this time. Why you just use
just the body of the candle, because when you're measuring an order block, right? When you're adding an order block and you're expecting price to come back and tap into that order block, you only want you're only expecting it to tap in at 50%. You see how this, you see this order block right here, and then this candle taps in about halfway.
Yeah.
That's all you're really looking for, right?
So basically, it's like the golden zone from the fib. It's the same thing as the 50% from the GAN box thing.
It is, but I don't want you to confuse the fib and the GAN box, right? The fib we use to measure retracements, right? The GAN box you use to get half of your candle. Yes, you can use the fib to get half of your candle, but because it's two different things, I wanted to use two different tools so it's not to confuse people.
Okay, I got it now.
That makes sense? Okay. So I was just interested in finding a POI, a point of interest, right? Which will be half of this order block. The weekly is not very clear, right? The last up candle before the down move is not clear. So I just jumped up a time frame to remove the noise, right? To make it clear. And then I got my 50%.
Okay.
So now I'm going to go back to the weekly. Now that we have our 50%, our area of emphasis, right? And if you notice, there is no imbalance above this line, right?
Yes.
All this is healthy price action. Here's where your imbalance is from this wick to this wick. And there's the 50% of it. So we expect price to push back up, mitigate this imbalance, and then push down. So what I was going to say was we could see price push up, close this imbalance, right? This lower imbalance from this wick to this wick. We can see it push there and then push down first. right? Maybe it mitigates this imbalance. Maybe it pushes down to here before it pushes up here. You see that? Because when this candle pushes up, right now, there's an imbalance. If price this week, if this wick right here in this candle doesn't push all the way down here, before price goes up, it's going to leave an imbalance. So I don't expect for price to push all the way down. I expect for price to push a small way down, then it goes up, closes this imbalance. Maybe it pushes back down here to close this imbalance. Then maybe it goes to the top. Does that make sense?
Yes, I'm gonna buy right now. But I'm wondering, so if you think it might come back down, can you go like to a lower time frame, maybe the daily?
Hold up. You say you're in a buy?
Yes,
Where did you get into the buy, Effie?
I think on Friday or Thursday, I can't remember.
Yeah, you're fine, man. Listen, you're fine. Where is your take profit?
Wait, let me get my phone. I'm concerned with my stop loss right now, not my take profit.
Well, where's your stop loss? I mean, listen, I see two possible entries. Actually, one entry for a buy. If you traded the daily candle, right? Did you trade daily?
Hey, what?
Did you trade the daily? Was your entry on the daily?
Yes.
Well, if your entry was on the daily, you got in either right here or you got in right here. And your stop loss would have been either where the bottom of my red box is or at one of these wicks down here.
I didn't get in down there.
Well, Alpha, you can't make it up as you go. So
that's my problem.
Yeah, exactly. So this is when you trade, you have to be consistent. Like there's a reason why there is an entry point to every trade, right? If you enter where you're supposed to, like if you had marked this out, this next candle would have put you in a trade. It would have went up to this next daily order block. You would have taken profit. Price pushed right back down. It created a new order block, but it pushed into this order block. So you could have taken this trade based off of structure break right here. You could have been looking for this to come back and tap into that order block and go back up, or you could have waited, right? Guess what you get here? You get another structure break. So price is going to push back, touch, and go in. So where are you, where are you getting in these trades at? Here's another order block.
Mm-hmm.
Right? So if you got in like today price should push into this order block and go higher. It should go all the way up. Look, and I almost have this candle to that order block. It should go all the way up to this order block first. Maybe it goes from wick to this lower wick, but price should touch this point before you worry about anything.
Yeah, I'm still working on my plan.
And these are still, I mean, this is a lot of pips, man. You worried about the wrong thing. This is still 300 pips. Come on, man. You can eat off that effort. You can buy one of those new Mercedes with 317 pips. And if you got in down here, that's like 500 pips.
Okay, so hold on. Price right now is at 1931.76.
Uh-huh.
And if it taps back into that last order block
down here,
around, yeah.
But Elfie, let's talk about this for a minute. Let's talk about it.
At me.
It's not. This is a bullish order block. You see that?
Mm-hmm.
So price is not coming back right now. It's going up. Bullish order block, price goes up. Bullish order block, price goes up. Bullish order block. Why would price go directly down? It's not. It's going to go up. Just like we talked about. It's going to go up at least to this order block, right? Which, oh, by the way, closes this imbalance. Then it might push back down, right? and this is just me speculating, Elfie. I don't have a crystal ball. I don't know. I only brought that up because I don't want people to think that this price has to go straight up to this imbalance. It's not really the way it works. It can go up a little bit, pull back, and then go up the rest of the way. As a matter of fact, I like this pullback because maybe this pullback is the 78.6 pullback, right? It went up here. It's not quite 78.6. It's a 61.8 pullback, but that's still a good pullback. And then price goes up here. So I just want you to be cognizant or be aware of what could happen, right? I mean, you're in a buy, which is awesome. You're going to make a lot of money on this buy. All I'm telling you is to have your areas of interest picked out. Like, where did you expect your buy to go to? Where's your take profit?
I have my take profit at 198.014.
Geez, you swinging for the fences. 98.0 what? 14. So I mean, look, maybe you have to adjust that. So you're shooting for how many pips? 300 pips.
I just saw it go up. I think I haven't.
Oh, wait. You don't. So you didn't have it. What made you put your take profit there? It had to be something. What's that?
I said I don't remember.
Well, did you? You don't write it down in your journal?
No.
So Elfie's giving us a great example of why we write, of why we write things down. So give me your take profit again. Give me the number of your take profit.
198.014.
Okay, just by eyeballing this, there's a high about right. This is where your take profit, close to your take profit. I personally would I mean, it would have to break through this order block in order to hit your take profit. If it breaks this order block, it's probably going to go a little bit higher than that. But I would probably adjust my take profit a little lower because I think we're going to get a reaction from this order block. I don't think you should ignore that there's a daily order block right here. Does that make sense?
Yes, and I see it on my, because I actually just looked at my MetaTrader chart on the daily. And I think I have an issue by just going by structure. I don't know. I'll just put it above that order block.
Yeah, I would, I mean, it's always good to take your profits either at the order block or, in the middle of it, because you're just expecting it to break through that order block, and maybe it will, but don't be surprised if it reverses at that order block. Yes. It can reverse and come back to this order block before going back up. I mean, you should be in major profit by then, but I just want you to we're discussing GN, but I just want you to be cognizant of how price could move, right?
Got it. Okay, thank you.
No problem. Does anybody else have any questions? Did everybody understand the discussion, first of all? Where's your chart at, Tuck? Hey, Essence.
Yes.
Did you understand? No, we can't hear you, Sean. Did you understand Essence?
Yes.
Oh, really? So you already knew all that?
Yeah, I did.
All right. What pair are you trading?
I don't have a pair that I'm trading at the moment.
Okay. Don't worry. We'll make up one.
Okay.
You on your laptop, Essence?
No, I'm on my phone.
Oh, Essence, you're not telling the truth. Let me see it.
I am on my cell phone.
How come you're not on your laptop?
Only because I got in here late. I just woke up a couple minutes ago.
Oh, log on your laptop so we can do some work. All right, where are the imbalances?
Between that wick and that wick.
Exactly. So you can. Oh my God, where's Naya at? All right, I need somebody on their laptop who can mark this up, just so I can check for understanding. Is there anybody that wants to mark an imbalance?
What do you need marked?
No, not you, Sean. I need somebody who's new, so I can check for learning there, buddy. Lexi, Monk, Nadia, DC.
I'm at work. I'm just
Okay. I listen. I don't want to put you on the spot, but I just want to check for understanding, because this is very important to your growth and your understanding of the market. If you can identify this stuff, you will make yourself a fortune. And if you have an clear understanding of what's going on, again, you'll make yourself a fortune. And it won't happen tomorrow, but it'll be over time, because you're only going to get better at what you see, right? And if you can identify it, the sky is the limit.
I can try.
Who's that speaking?
This is DC.
Okay. Are you on a laptop?
I'm on my phone, but I can kind of see the wicks.
I really need somebody on their laptop, because
okay.
I need them to share their screen and do the markups on their screen. So
Okay.
As long as you, look, we don't have to do this today, but over the next coming weeks, we really need to do this. Like, I'll do the talking and the moderating, but I'll need you guys to do the marking, because the marking is the important piece. That's when you check for learning, and that's when you're sure that you understand what's going on. It's easy to watch when I mark it up, but whenever you start doing it, you'll see how it is to be able to identify this stuff with your naked eye, or not, right? Or miss, like, you might identify this imbalance down here, but you might miss the one above it. So that sort of thing, by you guys doing the markups, you'll kind of start to understand how you can miss and misidentify things. And then you'll also understand that when you start going up and down time frames, what it actually looks like. So on this monthly, this is just a bearish order block, right? It's not really significant, other than the fact that, if you trade with me, you would probably marked up this entire order block like this, and you'd look for a sell entry, right? But now understanding it, what an imbalance is, your POI is somewhere in the middle right here, because that's where the imbalance is. If you drop down to the weekly, your imbalance is here, so you need price to come and mitigate what, 50%, right? So you would expect price to come in here 50% and then push down. Whereas if you've been trading with me before, you would have just said, okay, price is going to come somewhere into this order block and then push down. You guys tracking?
Yeah.
Yeah.
Okay, so if you understand what we've talked about, then you can kind of navigate your way around this market and actually make a lot of money. So if you look at this chart, with the naked eye, you can kind of see a distribution schematic plan out. And this leads us right into Wyckoff, which we will start to tackle next week. All right. All Wyckoff is basically a schematic that plays out, where they manipulate either the highs or the lows of the market before they take it, the direction that they want to go. So if you look at price came down, Wyckoff schematic played out. All right. They set a low, they took the low out. They set a new low, they took the low out. All right. They set a higher low, which makes you think it's going higher. Then they take all the lows out. This is called a spring. Then they shoot the market up. So the Wyckoff schematic playing out. Then it comes up and they do the same thing to the top side, except for this is the up thrust, and then the market shoots down, right? Then you get the Wyckoff, market comes up. Now you're getting Wyckoff and the market should shoot back down. Okay. If you understand market structure, you will see you'll get lower highs here. Well, there's a higher high, but this is a complex pullback. You're getting lower lows here. So as long as these lows continue to push down, you should expect the market to keep pushing down. Yeah, we can do that. Isaac said he wants to do an imbalance, but you can see as you get these lower lows, as long as the market keeps pushing past these lows, you get a retracement and then it should push lower, right? And this is your cue to keep taking trades to the shorts or keep taking shorts in the market. And you want to identify where to take the shorts every time the market retraces and gets that last up candle before the down move. Those are your points of interest where you want to hop in the market for the short. All right, Isaac, let me see. I can stop my share. And if you want to share your screen, you have a TradingView account?
Can you hear me?
Yeah, I can hear you now.
No.
Okay, so yeah, we won't be able to do it then. But I'll get you set up. I'll get you set up, Isaac. Everybody is going to need a TradingView account. Let's talk about that real fast. All right, you'll need to go to tradingview.com and register for an account. You don't need an advanced account. All you need is a basic account. And when you get to TradingView, it's going to give you, man, it's been so long since I actually done it. It's going to give you options to set up your TradingView. As a matter of fact, once you set your, you can go to YouTube and get a TradingView tutorial, right? And look at the TradingView tutorial. This is a 40-minute. They have faster ones, right? Here's a 15-minute tutorial. In fact, yeah, I would look at like the 15-minute tutorial to set it up, and that way you'll be good to go. And if you need help beyond that, just hit me up and we'll get together one-on-one, and I'll show you, what I use and how I use it. Okay, that makes sense.
Yeah.
So going forward, for those of you who don't have TradingView, go ahead and set you up a TradingView account, and stay abreast of the imbalances. And we covered order blocks last week. I showed you the video. Make sure you go back and watch that. Even if you saw it last week, it would probably help if you watched it again. The next 3 weeks, we're going to cover Wyckoff, right? So Wyckoff is a little bit more complicated. And the videos that we're going to watch are going to be a little longer, right? And a little bit more detail. But they're going to be great information. And I don't expect for you guys to walk away understanding everything about Wyckoff. But what I do want you to do is kind of understand the general idea of what's going on during a Wyckoff schematic, right? The market is either accumulating, which means it's going higher, or it's distributing, which means it's going to go lower. And your job as a trader is to figure out which one of them it's doing, right? And there are ways to be able to tell which way it's going, right? As a retail trader, and we're all retail traders, but people who trade with retail concepts, a lot of times you'll hear the people say the market is consolidating. And I would say that it's not consolidating. It's accumulating, or it's distributing. You know, it's going to go one way or the other. And your job is to figure out which way it's going, or to, you know, to get clued in to which way it's going. Because you can make a lot of money on breakouts, or by anticipating the move and understanding where you need to look for an entry. Do I have any questions over anything that we covered today? Everybody is smart on imbalances.
Tosumbro,
Yes, ma'am.
guys, it's Monk. I wanted to show my screen.
Okay. You're definitely free to show your screen. You can share.
Let me can you see it?
Yeah, it's very green. I can see it.
Yeah. Okay. So I have Ethereum up. I know it's colorful. And I was looking up here. That's why I put the GAN box.
But
And
let me ask you why. Why did you put it up there?
because I was looking, and this seems to be the candle going down. I wasn't sure about this.
Okay,
Right.
but
Yeah.
let's talk about this overall, right?
Okay.
I don't want to just put a GAN box on any candle.
Okay.
So the first thing I would like for you to do is kind of squeeze this together so we can see more of the market. Okay, now make it smaller. Oh, okay. There you go. All right. So this chart is busy, but what I want you to tell me is the market going up or down?
I thought it's going up.
Okay, so if the market is going up, and I agree,
Okay.
I think it's going up. Why are you putting a GAN box on the market at the top?
I wasn't too sure about the GAN box. I thought that's where I can buy up to, or is it an entry point only?
So you're saying you can buy it up to that point?
Yeah, that's what I thought, to close the imbalance.
All right, so now that I just want to get your train of thought, right? So now that I know that you're saying you can buy it up to that point, now let's have the conversation. Now you can zoom back in and you can show me what you're looking at.
I was looking from here and here, this area right here.
Okay, as far as an imbalance.
Yes.
Okay, I would agree that that there is definitely an imbalance. Can you highlight your imbalance? Just the imbalance?
I was looking at here. There.
Okay, so first of all, the imbalance, you need to take it down. You see the first wick, the first candle that you marked up where you started your imbalance?
Right here.
Okay, yeah, an imbalance is a 3 candle. It covers 3 candles. Where's the third candle?
Oh, here.
There you go. So that's where your box needs to go. You need to
Oh.
drag your box down there. Okay. Now, those other candles have dipped into that imbalance. You
Okay.
understand it?
Yeah.
So have they dipped into it 50%?
No.
So that's where you need to put your GAN box over that imbalance to see if they've mitigated it.
So I
Right?
put the gun box on this whole candle or just
Just the
here?
imbalance. Just the imbalance, because you want to find 50% of the imbalance.
Okay, so I'm gonna put it. You mean up to here or up to here?
Down there, right there.
Down here.
Yep.
Okay.
The entire imbalance. You want 50% of that entire imbalance,
Okay.
because that's where you're expecting price to come back to.
Oh,
So I think you need to go back and explain why you put the GAN box on that candle.
Okay, but back
I
up.
think there's a little confusion over why it went on the candle and versus why you're measuring the imbalance this time. You understand what I'm saying?
Yeah, I do.
All right.
okay.
Did you mark up 50%?
No, not yet. So that's the 50. Okay.
Okay, so that area
Mhm.
is where you would expect price to come and mitigate, right? So that's an area of interest because it's where your imbalance is, right?
Okay.
Now, the only issue I have with this, I think price is going to go higher than it, and I think price is going to go higher than the high on this, because we agree that this market is a uptrending market, right?
Okay.
So, not that I have a problem with anything you did on the top side, but I think the analysis, I think you have it backwards, right?
Okay.
You like your all of your interest in your imbalances should be on the low side on an uptrending market,
Oh.
because you're interested in where the market is coming down to, so you can get in for a buy, and you're going to ride it up as far as it'll go, right?
Yeah.
You would
Yes.
ride it up past those
Mhm.
highs. But in this case, you're marking up imbalances on the upside. You already know it's going.
Oh,
You just
oh,
don't know where. I'm sorry, go ahead.
yeah, I understand now.
Yeah, you just don't know where to enter the market at.
Okay.
So really your markups should be like, if you squeeze this back down a little bit,
Like this?
a little bit more, like at the bottom of your channel where the market started shooting up. Okay, so you see down there where the market started shooting up, right there at the right there.
Yeah.
There's right. You see there's your order block, and then you, like 2 candles later, you have a pretty good sized candle.
Mm-hmm.
Put your cursor on it.
Right here.
So 2 candles after that. Okay. So I want you, the candle before that, it has a wick on it, right?
Yes.
Mark up that wick.
You mean I should pull the box all the way up there?
No, I want you to do a separate box because the box you have down there is for the order block, correct?
Yes.
That's correct. But now I want you to look for the imbalance. There you go. From there up to the next wick right there. That's an imbalance. Do you agree?
Yes.
Okay. So that's where I would like to see the market come to close the imbalance, right? You see how the market shot all the way up there?
Mm-hmm.
And now it's coming down.
Mm-hmm.
Why is it coming down?
Because it has to come to close this imbalance right here.
Eventually it needs to close the imbalance, right?
Yeah.
But it also needs to retrace after that huge up move. Does that make sense?
Mm-hmm.
So, how far does it need to pull back from that initial move, the order block down there, the bottom of that order block? You can put a fib from the bottom of that order block to the very top of this move, and you can measure the pullback, right? The pullback might only make it 50%. Maybe it goes a little bit higher. I see the way that you have your little pink, I guess the mark, you're tracing the market as it goes up.
Mm-hmm.
Right. But if you look at the actual candles, the candles are signifying that the market is still selling down.
Mm-hmm.
What you want to identify is where the heck is it selling to, right?
Yes.
So now you have an idea of where it could be going, right?
Mm-hmm.
That imbalance that you just marked up.
Yeah.
It could go there, or it could close the imbalance completely and then go tap back into your order block. And if like those should be your 2 points of interest to take a buy. Like if it taps into that imbalance and you get a bullish order block, right?
Mm-hmm. So this so you are saying it's gonna go from here and
Yes.
probably here or even here, right?
Yes.
Before it goes up.
Yes. And do you know why? I mean, now
Because it has to come to fill this imbalance right here.
Exactly. And this is why, I mean, this is where you're going to set an alert, right? I see you have an alarm on that page, right? But
Yeah.
my alarm would probably be a little bit lower, telling me, hey, this is the price is entering my area of emphasis. This is what I'm looking for, right? Like, you're looking for it to close that imbalance and show rejection, like give you an order block that is going up, or you're looking for it to go through that imbalance and tap into your daily order block where it goes higher.
Yes.
Right. Those are your reasons that price should be doing that. It's not just free falling, right?
Yes.
You have areas of emphasis. This is why the market is going down. So if you understand this type of thing as a trader, you could have shorted the market to at least that imbalance. Like several days ago when it started selling, you could have been comfortable saying, hey, I'm gonna short the market to my POI. And your POI would have been, you could have shorted the market to that imbalance pretty much.
She still can.
Well, yes, she can, but I'm just saying, like, this move, she could have had still all those steps.
It's in an order block right now, bearish order block right now.
I agree.
Okay.
You see that? You see the bearish order block?
This one.
No, the one
right? Or the second one? Or the last one?
Yeah, that's not it.
This
It's right
one.
there. That one. That's the bearish order block, right? So if you drew a box across there, you can short the market from there to your POI.
Okay.
Does that make sense?
Yeah.
Now you would have to take profit in the middle of that imbalance, because you're not guaranteed that the market is going to keep pushing lower than that. You have to take your for sure money, right?
Yes. At least up to here when it touches the imbalance, right?
Yeah, yeah. I mean, that would be the safe bet, right?
Safe
And
one.
you always
Yeah.
want your safe money.
Yeah. Okay.
I think that's listen. I think it's awesome that you can that you're able to identify. Your chart is busy, but don't worry about that. Well, you can't. I mean, I think as you get more experience with smart money, it'll be less and less busy, right?
Yes. Yeah.
Initially, you need all the markings and all the indicators and all that stuff.
Uh-huh.
I've been there, but as you get more comfortable with smart money concepts, a lot of that stuff will come off of your chart, and you'll just see the basic things on your chart, and you'll understand where price is moving and why it's moving there, right? But this is clearly an uptrending market. There was an impulse move, and now this is a pullback, right? And we can expect the pullback to either hit our imbalance or the order block before it continues to push higher.
Okay.
But I appreciate that. I appreciate you stepping out there.
Thank you so much for explaining.
No problem.
Thanks.
So I'm gonna go ahead and share my screen again, because I want to address what I just saw. Ethanol USD, that was what was that, a bit stamp? Coinbase. Okay. So this is what I had marked up on the weekly. I also had it shorted, but all right, Vang. There seems to be a little confusion, and it's natural, of why I used the GAN box. Let me just trash all these markings. Okay. Whenever I use a GAN box for the order block, right? I only want 50% of the candle. So that's why I use the GAN box. I'm not measuring the wick. I just want 50% of this green candle in this case. I want the 50% mark because I expect for price to come to the 50% mark. Now, if I drop down time frames, right? If I drop down time frame, that 50% mark is going to identify, right? The top of my imbalance, right? And this is a little bit off, right? It's a little bit off. I have to adjust this down a little bit. There's my imbalance from here to here. Everybody see that imbalance?
Yeah.
Now that I have the imbalance, I need to put another GAN box on the imbalance. And for those of you who don't know, this is just called refining your POI, or refining your entry, whatever. You're refining it. You're dropping down time frames and you're making it more clear. So I need to get a different color here. All right, this blue line represents the imbalance, right? So if I go to this weekly chart, this is my order block, right? For those of you who trade with me on order blocks. When price comes back to tap into this order block, you want it to at least tap that blue line. So this would be where your entry point is, right? This right here might be your stop loss, right? This will be some people's stop loss. I know a girl who will not take a trade. She won't cover more than half the wick because she believes that price is going to respond to these imbalances. So this would be her entry. This would be her stop loss, and she would short this market, right? So when the trade comes back up in here, it should be able to tap her entry. She should be able to take the trade to equal lows. And in this case, we're talking about body lows, not wicks, but body lows. So her short position would end up looking like this. Okay, now this market is an uptrending market. So it's not a good trade to short an uptrending market, right? Unless you know for sure what the market is doing. It's a better situation if you would flip your analysis, right? Here's your order block. Price went up. Guess what? It came all the way back. Price came all the way back because you have an imbalance here. You see that imbalance? No wick to this wick, imbalance. The market is going up. It came all the way back. Close your imbalance. Tap your order block. Because the order block goes wick to wick. Tap your order block. Now you're in the trade. Retracement. I guarantee you there was an imbalance in this wick. That went up. So this is why you look for longs in an uptrending market, not shorts. This is a bad trade because the market isn't just going to hit this imbalance to come back. It's probably going to go higher, right? If you look at the trend, the market is going higher. So the idea, because this market was going higher, is to wait for your long, right? You see the up move, you wait for it to come back. Patient trader gets paid, it taps right in, and now you're winning. Does that make sense?
Yes, it does.
All righty. I think that's all that I wanted to cover for the smart money concept. It's important that you guys understand both order blocks and imbalances, as it pertains to trading. Because if you understand order blocks and imbalances and how price moves, you're gonna, you'll be in a good spot, when it comes to identifying good trade setups, high probability trade setups. And market structure is going to be key too, right? You have to understand you're in an up market or a down market. You have to understand, hey, this price broke structure or it didn't break structure. Once you can identify that sort of stuff, you'll be able to make yourself, a small fortune. Everybody tracking? So I'm going to go ahead and end this recording and this call. Prince, you on for the meat and potatoes of the swing call, huh? No problem, Monk. I need to I need to see about these guys in this swing trade. They might have popped in and out. I didn't have, I wasn't monitoring the